I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Show, and today is July 13th, Wednesday.
And this is the interest rate update.
Okay, so for a lot of people, the inflation number is something that they've been kind of paying attention to. We've been talking about the inflation number. It's coming out. It came out this morning.
Yeah, never knew what it was like a year ago, but that's all people are talking about these days.
Yeah, I mean, I know that for a lot of people, it's boring, and it isn't something that really affects their daily life. But really, today or these last couple months, there is just so much more attention on inflation. So today, the CPI, the Consumer Price Index, was released this morning at 8:30 Eastern Time, and it was in the way that the reports are every month. The inflation number comes out, and it always compares the month. It's so for July today, it was reporting the June 2021 prices, comparing those to June 2022 prices.
I always taking that year look.
Yes,
I was wondering, why are they not doing it per month? I did see a month.
Yeah,
number
they
the other day,
measure the monthly,
but I think it's just easier because if normal inflation's 2%, if you were to divide that by 12, you'd be talking about 0.7 for the month change.
Yeah,
but on an annual basis, I think it's a more whole number. Usually the target's what, like 2 or 3%.
Yeah, and inflation might go up like a 0.25% in a month, but it could be the number up and down, Whereas over the year, you get probably more of an even look.
Mm-hmm.
And that is the number, June 2021 to June 2022, 9.1%. Okay, and that includes fuel prices, the food, everything's in there. It was higher than, so last month it was 8.6%.
Which was high. 8.6 was high.
Mm-hmm. And today they were expecting, all the experts and analysts were expecting 8.8%. So this number, 9.1, obviously higher than the expectation. So a couple things happened. One, the stock market reacted negatively immediately in the news this morning and went down. The most of the markets went down about 1.5%. But it's been a couple hours. It's about noon right now in Arizona. And right now we're seeing the stock market's right about even.
Mm-hmm.
And we also saw the mortgages did come out negative this morning as far as they were higher interest rates. But today we're seeing interest rates exactly where they were yesterday.
Mm-hmm.
Now, obviously things are fluid, but
yeah, and this is why we didn't actually put our disclaimer out. We're not financial advisors,
right?
So that's our disclaimer this morning. That we're not financial advisors. We're not experts.
This is for informational purposes only.
Yeah, and we are smart, but we're not that smart. And this tells you exactly what we mean. It's really difficult to figure out and project where these markets are going to go. There's so many different little variables. It's easy to say, push this lever, and this is going to happen. Last night, Ed and I were talking. We thought the CPI was going to come in higher. We thought interest rates were going to go higher. They did, but then, an hour later, it came back down.
Yeah.
So highly complex.
So a lot of analysts do believe that this is the high point for inflation, but I think that's the hope. The hope is that this is the high point of inflation. And that next month, when they report, it's going to be about the second week of August. We do think that that most of the analysts are hoping for a lower inflation number.
Mm-hmm.
So we really do hope that we can get over this, this rising inflation, so we can start seeing the Fed have a policy that reduces the Fed rate.
The Feds are just super nervous right now. Yeah. We just need them to relax.
So that just goes right to our 70-year history of inflation, just to show you where we are. We're seeing the interest rate or the inflation numbers at levels not seen since 1981.
Okay.
And then all this history here from 1948 to 1980. This is interesting. This was using a different inflation calculation. So this is, you can't really compare the inflation in the highlighted yellow to the unhighlighted. Just wanted to point that out. A lot of people say that our inflation today, if we were calculating it based off of this formula, we would be higher. We'd have inflation higher. But anyway, this is it's really is a 40-year inflation. We're right back up there, and we could likely fall quickly back down. We sure hope so. And
Wow.
here's one of the big takeaways here: inflation peaks right before 9 out of 12 recessions. These gray columns are recessions, but you know what? The recession word is not as I think everyone's expecting it anyway. And when it comes to house prices and mortgages, you just stay with the channel. Be sure to subscribe and comment, what your thoughts are about the market. But really, we've also seen that house prices over the last 7 recessions actually don't go down because of a lot of different reasons.
Yeah, we've always talked about the recessions. They're always different. Everyone thinks that they can predict, and I think that's the easy thing to say. Oh, well, since it happened before, it's going to happen again. Well, things may happen in the future similarly to the way that they happened in the past, but they will be different. They will be from different things. So, yeah, it really is anyone's guess at this point as to where we are going, and that's unfortunate, but that's the reality.
Yeah,
we're just here reporting what we know.
All right. So last but not least, the interest rate update. Where we are today, same report as yesterday. We see the 30-year fix at 5.19%, the 15-year fix at 4.375,
the 30-year FHA 4.625, the 30-year VA 4.625, same as yesterday.
And remember, these quotes have no points. There's no extra discount fees or any fees extra to buy down those rates. That's just what you're going to get normal closing costs for these a conventional scenario like this, an FHA and a VA. And that, again, is just something to really keep in mind. If you have a loan estimate, you're in the middle of the process for a purchase or refinance, be sure to send us the loan estimate. We'll be happy to review it. And again, we're mortgage brokers right here in Phoenix, Arizona, and we'd love to work with you.
That's right. Searching only wholesale lenders. That's all we work with is wholesale lenders. We don't work with any retail. So those are the savings that we pass on to you guys.
All right, everyone. Be sure to subscribe, comment, and like, and we'll be back tomorrow.
All right. Thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.